Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great week wherever you're at. For those of you watching on YouTube, you'll see that my background is a little different, and that's because our family bought a new house. We moved into it, and lo and behold, when we moved in, the furnace was broken. So I do not have all my podcast equipment with me. It'll probably sound a little different. I won't have my fancy dancy background, but we roll with it because that's what you do in real estate. When things don't go your way, you just you find a solution and you keep moving forward. But today is a good day because we have Micah Nicholes with us on the podcast. He is from Usleadlist.com, all about data. Every deal starts with getting in contact with the seller. And so this is how you do it. You have to have a good, solid data list. It's one of the hardest parts, actually, is having something quality list to be reaching out to. So this should be a good one. Micah, thanks for hopping on the show.
Hey, man, it's my pleasure. Sorry about your furnace.
It happens, right?
Absolutely.
Right. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
Yeah, absolutely. I've always been a kind of chronic entrepreneur, a lot of missteps, a lot of things that didn't work. But in 2015, I took the plunge. I found an on-market fourplex for $52,000 that was generating $1,800 gross a month. And so I picked that up. And then 1 month later, same actual broker is like, hey, I've got another deal. So it's fiveplex, 90,000 and made 34. And so I was like, they're almost like, 3% deals. And that was how I started, self-managed. Gosh, the stories that you kind of put together from self-managing. I was just talking about it yesterday. I had a tenant. This is actually, it's sad and devastating, but this lady had this dog. It was sick. And one of my tenants called me. She's like, hey, Micah, there's a dead dog on the porch. It's like,
oh, geez.
And we were talking before the show started that I live in Wisconsin. So it's cold. It was wintertime. But she had her dog who, passed away. It was sick. And it was in a cardboard box frozen on the deck of this fiveplex. And I'm just like, the thing, like, you're
only in real estate.
Like, I never thought I would ever have to have this conversation where I'm like knocking on her door and saying, I'm sorry, you can't have your dead dog on the porch. And she, she was relatively nice about it. She took the dog and she put it in the back of her car.
Jeez.
Yep.
Yeah, but those kind of stories, when you start to own rentals, that will pop up, and it's something that just happens. You always get to see the most niche experiences in the human life when you own real estate, because you are watching over the place that people live, and a lot of them, once you start building them up, you get to experience all those different stories, which is one of the that is a sad story, but it's also you get to hear some of the good stories, and so you get to kind of get a cross section of human experience, which is one of the reasons why I like real estate. So you got started in, it sounds like, multifamily. What did you do after those two deals?
So yeah, basically I just self-managed those, and then kind of transitioned. I started flipping and doing wholtail, and probably did, half a dozen deals a year for the next 4. And then bought another 12 units in, right before COVID, great timing. Just a stupid deal on that. And then right during COVID, I actually bought this business. And so kind of segued from, buying assets into buying this business, which Usleadlist, the guys who ran it, I think they started in 06, 07, somewhere right before the financial, kind of crisis. And great guys. They're just ready to retire. And they had this completely digital business that they ran from paper. And so I was searching for a bunch of different, businesses. I was working at restaurants. I cobbled together, I had like 4 different identities, and I was doing a bunch of different things. I was like, I just need a sole focus that I can do. And I had gotten hurt as well. So I just like wanted to pivot. And so I was searching for businesses, and yeah, like when I looked at this one, I was like, I'm already in real estate. This is cool. I'm interested in data. I love finding, kind of niche opportunities. And that was one of the biggest upsides. Is like literally they're taking orders by hand, and yeah, it was cool. So yeah, bought that in late 2020, and yeah, basically just been growing our business, and also just making our data better, sharper, and more refined in the space. For folks who don't know, Usleadlist, we kind of specialize on a niche product called the inheritance list. And when I say that out loud, most people think probate. They kind of like take that to the most understandable concept around death. But what we've kind of refined is like death and real estate, which is what we're really good at kind of lining up. It's more than just probate, and anything around that scenario is an opportunity. Like when we look at our historic data, like after 2 years, any data that we're generating, there's about a 50% title transfer rate of stuff that we're kind of compiling. And so this is a really good way to kind of concentrate opportunity on your marketing end. And so yeah, in that space, there's kind of like 4 different categories that we've found to kind of bucket information into. And we don't segment these because, like I said, we're just lining up the death and real estate, but it's, surviving spouses, pre-probate, trusts, and then interfamily transfers before the death. And so all of those kind of represent those. And 3 of those bypass probate entirely. And so if you're just going for strictly probate, you're kind of missing a really big chunk of that opportunity.
Yeah. Yeah. And it's crazy how many times having a family member die, does kick off the sale of a property. A lot of times I literally just had a conversation with a mobile home park owner last week. Her husband died. She's been running it for like half a year, and she's just like, I can't do this. And so she's trying to get rid of it. And that happens more often than you think. There'll be a husband or a wife or somebody in the family that's running the business. That person dies, and the other family members take on their business, and they realize like it's not even that they can't do it. It's most of the times they just don't want to do it. They don't want to run the business. They just want to cash out. And so there's a very, very small window during that period in that person's life, where if you're there and you give them the solution of cashing out of their business, then they'll definitely take it. But it's also a difficult time for them. And so that is one question that I have for you is when you're reaching out, inheritance list, somebody died in this person's life, and so it is a hard time for them. How do you have that conversation? How do you present it in a way that is tactful and respectful of the time that they're going through?
Yeah, absolutely. That's like one of the most like biggest curiosities around. It's like, how do you do that well? And it's really simple. I mean, in my business, we direct mail these people. We cold call them, and we also text them. But I don't treat them special until I get them on the line. I treat them like any other lead. I market to them. Some of my marketing is really vague. Like my initial opening letter, I just say, hey, I have a question about your property. I don't even tell them that I want to buy it, because I'm already talking to such a warm pool of people who I are going to sell. So I get 10% response rate on that initial letter.
Wow, 10% is really good, especially for if you're doing something like a mailer. In the single family space, we'll see below 1% sometimes. It's like
the main distinction here is like, because I'm not nominating why I'm sending them a letter, I'm just strictly provoking curiosity. That callback rate is really high. And so you get a lot of, you have to kind of triage what comes back at you, right? And so, yeah, people are like, oh, I thought you had a question about my landscaping or, whatever. But at the same time, what I really like about it is that you can start a conversation, and there can be social pressure during that conversation. And you can ask them genuinely, hey, I'm an investor. I'm, looking for property. Have you considered selling your home? And they have to decide that instant whether they want to say yes or no. There's no premeditation. They're not thinking about it while they're reading your letter. And so if you don't mind taking those extra calls, and that's the next thing that I'll segue into is, the conversations that I'm trying to have with these people are different. I'm not pushing to dollars or cents. Like, I'm literally just trying to open up a good conversation and create really good rapport by asking open-ended questions. As soon as they say, yes or maybe to that, do you want to sell your property? I just say, like, okay, well, what's the circumstance here? And they elaborate, and then I ask them another open-ended question. And it's amazing how, I guess, the power of that, repeated process of listening really intently, doing a really good job, being empathetic and caring about what someone says. You can get them to be, your devout buyer if you do that right. And I feel like so many people, especially people that are starting in this industry, they go to dollars and cents. They make that 50 cents on the dollar, 60 cents on the dollar offer, and they're like, this isn't working. And I had a deal earlier this year. It was a development deal, and I chased this guy. I wrote him a letter, that letter that we were just talking about. He wrote me a letter back.
He wrote you a letter back. I haven't had that happen, actually.
He wrote me a letter back. I wrote him a letter back, no response. I door knocked him 3 times. I started cold calling him. Finally, after that third time, I got in front of this guy and I made him an insanely low offer on his property. I think whatever it was like 60% of the ARV. But what I didn't realize is it was a perfect development play. And he's like, he just basically laughed at my face, but he was kind. Like I did a good job of connecting with this guy, and then he's like, yeah, that's not going to play. We're so far apart, you don't even understand. So I literally made this guy, I want to say over 10 offers. Finally, I got under contract for $2 million. My initial offer was, it was like 500K, something like that. But 4 acres in a really nice area. Already had conditional usage for multifamily.
Mm.
Then I partnered with a developer and basically got this through entitlement, and we wholesaled it to the end developer for $250,000. And those kind of scenarios, they don't happen if you're just like you're rushing in. You're like you're all you're trying to do is make that offer. I did make a low offer, but through that process, like, I got this guy to like me before I made an offer. Like he's like, you can tell by how people talk to you, how they have, they revere you in a way. So that's what I would say, is the most important skill, is building connection before you try and buy something. That's really, there's so many emotional there's so much emotional and logistical static in these people's lives that they're not used to. They lost something that is, irreplaceable. And so doing that well for me has been the best skill set to build.
Yeah. Listening is so crucial. And it's also really important to remember that these people do not do this all the time like you. They are not, doing a deal is not something that is second nature to them. And so taking the time to understand their point of view and understand what they want is so much more useful than actually just trying to push to the closing table, because there's going to be less friction, and they're going to be a little bit easier to work with if you are putting yourself in their shoes versus only focusing on the end goal. Definitely. So let's go back to the data itself, because getting a good list, I can't tell you how many lists that I've pulled from places like, Property Radar, lists, or I use a whole bunch of different sources, and it is difficult to actually create a good list and create a list that has a high callback list or a callback rate. So what are some of the tips, I guess, that you could give people to increase the response rate just in the quality of the data itself? Like, is there any specific criteria that you suggest people add to their poll, or what are some tips that you can give for actually increasing the quality of the data that you get?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Well, I mean, I guess there's kind of, that's a multifaceted question. Like, if you're referring to like what we're doing for data, like I don't honestly know of a place where you can get the data that we're doing for folks. But if you're talking about just any other place where you garner data, be it, prop stream or whatever, batch leads, any of those, I think that, the hard part about those is that it's easy. And so a lot of people can do it.
It's easy. So many people reach out.
Yeah. And so my recommendation is like, hey, if you're going to go for a list and whatever, I don't care. I'm not covetous of what we're doing. Like, if you're going to go down to the courthouse and get probate leads, like, great. First, make sure they actually own real estate. So you got to segment that out. When you're actually doing marketing, don't make it look like everyone else. It's really easy to price shop, direct mail senders. Like great, but if your mail doesn't pass the junk mail test, then like you're wasting your money. So, what I've found is like spending more on direct mail does actually make a really, really large difference. Showing up in a way, whether
and you're talking, when you say spending more on direct mail, you're talking about the quality of the mailer that you're actually sending out. So instead of like a just a standard postcard, you're sending out windowed letters. Go a little bit deeper into that.
Yeah, absolutely. So not windowed letters for me. Like I guess the best way to visualize it, like think Hallmark condolence letter. 3D, put a penny in your letter, like whatever, any way that you can show up and have it not appear to be like the standard set of mail, where like, again, I talked about this earlier in the marketing. It's like, it inspires someone to be curious. Like if you can get someone curious about what's inside of a letter, like that's a really good thing. That means that they're going to at least take a second to read and understand. And two, we already mentioned, like there's emotional problems, there's logistical things, like, so you got to break through more of that static to get this person's attention to deliver your message, which is fine, because in this space, like the deals are larger, the spreads are bigger, and we already talked about, like, these people are very likely going to sell. So and then the other thing that I would say in that is good actual physical marketing, but then the other part is length of your marketing window. You said it earlier, you had that conversation, someone passed away, they took over this property for someone else, they're kind of starry-eyed, they're like, oh, this is going to be great, I'm going to run the family business, I'm going to take care of this property, and then they realize it, and then they find a dead dog on someone's porch, and they're like, no, this is for me. They're like, no, I'm out. And we all forget, like, our attention span is so small. Like, well, I mailed that list a month ago. Like a month for someone's life is, like that could be the difference between a giant opportunity and someone like just thinking that I'm the best landlord ever until they realize they're not. And that could happen in a week, in a day, in a month, it doesn't matter. So for me, like I market over a longer time frame. So usually I'm hitting these people for at a minimum 2 years. I don't mail them every month. I send them 3 letters in succession right away, and then I switch to quarterly.
Oh, interesting. Okay. And when you say 3 letters in succession, are you talking like once a week, once a month? Okay. Interesting. So you send 3 letters in a row every month, and then every quarter up to 2 years. Huh. Yeah, that makes a lot of sense. A lot of people that I've spoken with do that strategy. The downside is that it can be quite expensive. We tend to, we focus on mobile home parks, RV parks, and self-storage facilities. So it's on the commercial side. And so there's a bigger return on the dollar. And so what we've done up to this point is a single shot. So we'll pull a list, we'll skip trace the list, and then we'll send them a letter, we'll text them, and we'll call them. And then if we don't get something from there, we move on to the next batch. But I think there's a lot of truth in what you're saying, in that if you just extend the time that you're actually speaking with them, there's a higher probability that you'll actually get a deal done. Because there's been times in my ownership of properties where if you had called me during that specific day and said, "Hey, I want to give you an offer," I'd be like, "Let's do it. I'll sell this."
It's time to cut the cord here.
So that makes a lot of sense. 2 years. I do commercial. A lot of people listening do single family. Is there a difference in the way that you approach the two categories, commercial properties versus single?
I would do work in commercial, but limited. It's not like a giant focus of mine. And in my own process, no, I treat them exactly the same. To me, it's all about just basically creating a good, warm conversation where like I can present myself as a good person who's trying to help solve someone's pain around a property that they can have. And at its core, that could be applied to commercial, that could be applied to industrial, single family, or land. It doesn't matter.
Yeah, makes sense.
To me, like that all starts from just good questions and active listening
and continuous outreach. Over 2 years, that's a long time. But I have had deals close, longer than 2 years after I had the initial conversation with that seller. And so it makes sense to just keep it going, especially if you have rapport. If you've already developed rapport in that first call, do not give up. Keep talking to that person. Put a reminder in your calendar every quarter, even twice a year, even every 6 months. So long as you're keeping that rapport going, keeping that conversation moving, you will at one point talk to that person right when they're ready to sell, right when they got the dead dog on their door, or they had somebody that they had to evict and it took 6 months to get them out, or some kind of pain occurred with that property that they own and they've reached their point, they're ready to sell. You got to be calling them at that point. You have to be just continuously calling them for a number of years until you actually get that deal done.
100%. And like, how many times for you have you you made that call a week late and they're like, "Oh, I already locked up with someone"?
So many times. And that is so frustrating, especially if you've talked to them prior. Cause I've had conversations where I'll talk to, Joe Smith about his self-storage facility. And he's like, "Oh, I'm not ready yet. I'm not ready yet. Call me next month." I said, "All right, I'll call you next month." I put it in my calendar. I call him the next month. "Oh, I'm not ready yet. Call me the next month." All right, I'll do that. And I keep doing this for months and months, until finally one month I call him and he's like, "Oh, I sold it last month." And I'm like, "God damn it." It happens more often than you think. You just got to get them at the right time.
That's exactly right. Yeah. Whenever I'm, talking to acquisition people, I'm just like, guys, like if you say that you're going to call them in a week, call them in 3 days. Like you're like, if you give them a time frame and you say that this is going to happen, and like figure out some weird excuse to call them. "Oh, I was just thinking about this. You came up in my mind and I don't know why, but I just wanted to talk to you. Any interest today?" And the only reason why I talk about that is like, I've just missed so many opportunities, like literally millions and millions of dollars of opportunities, because I didn't do that. And I still suck at it. Like I could be better than I am, but yeah.
Yeah. Right on, man. Well, hey, we have gone through our time. Usually at this point, we go into the quick question round, but because of my furnace, we are going to be passing on the quick question round and going right to the last question, which is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Give us how can they reach out to you, and then what can they expect when they reach out?
Yeah, absolutely. Honestly, best way probably to get a hold of me would be on Facebook, Micah Nicholes, or just pop in on our website, www.usleadlist.com, and fill out a quote, and say you came from Gabe. And then as far as the conversation goes, I'm just going to ask you what you're doing in real estate and see maybe if our leads are a good fit. That said, there's a caveat, like, there's probably, I don't know, 120 counties of our data that's sold out. We have an upper limit cap of 3 investors per county. And so your county may not be available. So I apologize for that ahead of time.
Yeah, makes sense. And it's also that I like to hear that from a company like yours because otherwise, that that company is selling your data over and over and over again. And you're going to be the 10th person that person that the seller speaks with. And so, like Usleadlist, like you guys do, if you limit the number of investors that you actually sell that data to, then there's a good chance that you'll actually get a deal done. So love to hear that. Well, Micah, thank you very much for hopping on the show. It has been a pleasure, and I wish you the best of luck going forward in your deal.
Yeah, thanks so much for having me. Appreciate it.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review on Apple or whatever you're listening to this on. Other than that, hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.